Hello friends, I am Onkar Singh and welcome to our channel Mindscraft. Friends, today we are going to discuss about accounting, which is very important subject for a commerce student. Accounting, when a commerce student, a few of the commerce students, when they hear accounting word, this accounting term for the first time, some have that fear factor, some hate the subject, but trust me, this is one of the interesting subject that you can ever learn. Okay, now accounting is based on calculations. Now it's a myth about a myth among people that the one who is good at maths is good at account. It's not like that. About accounts, if your calculations are strong, you will really enjoy the subject. It don't have the algebraic terms and all. You don't have to see cos theta, sin theta, tan theta about that. Okay, it's very practical subject, totally based on calculations. Okay, it's very important and interesting subject that one should learn. Okay, so let's start. Now accounting, when we say this word, it's basically about recording business transactions. Okay, because a business is full of full of transactions that take place in day-to-day life. So if we take the meaning of accounting, is accounting is it's a continuous process of reporting business transactions, then classifying, summarizing, analyzing and interpreting financial data. This is what the meaning is. I again repeat, accounting is the process of recording business transactions, classifying, summarizing, analyzing and interpreting business transactions. So basically the base is transactions. Now earlier, like when we go towards the past, accounting was all about recording. Okay, in the earlier kingdoms they used to record all about the revenues, all about the payments which they have paid to the laborers on a clay tablets. Okay, thereafter people started recording, they started preparing the statements. Okay, opening balance, closing balance of the resources. Okay, in order to report to the viziers and then to the king. Okay, and from there in 1494 a special term in accounting, that is double entry book system. Double entry book system, when we say that, it involves DR and CR, which the double entry book system of accounting we use today. The first time this words DR and CR was first coined in 1494 by an Italian mathematician and philosopher Pacioli. Okay, for the first time, and from there this double entry book system, which is used in most of the organizations today, is used today. Okay, was coined that time. So let's now what is double entry book system? Okay, and how it is different from a layman's accounting. Now when I say layman's accounting, layman's mode of accounting, basically over there when the trader, small trader, or the one who is not accepting, or the one who is not using the double entry book system, he used the traditional mode of accounting. Like whenever the money is coming in, he would be adding it, whenever the money is going out, he would be deducting it. Okay, now this is what I will say traditional mode, or there is one word in accounting, that is single entry system. Okay, single entry system of accounting, we will be making one separate video on that. Okay, but as of now you just understand that the single entry book system of accounting not involves DR and CR, the prominent two aspects of accounting today, which is very famous, which is widely used in today's business world. Now what do you mean by DR and CR? What is the full form of DR and CR? It means debit recorded and credit recorded. Some terms or some aspect of transaction or some terminology, okay, in a particular transaction there is dr and some is cr. Okay, now before going deep into dr and cr, what is the basis of marking dr and cr? We should understand the terms which are widely used in accounting. Okay, those terms we say it as accounting terminologies. Those are repetitively used in a business, in the business world, in daily business routine. Those are accounting terminologies. So let's start one by one. So we will start accounting term by transaction. Now what do you mean by transaction? Transaction is basically is an economic activity, okay, that changes the financial position of the business, basically which is recorded, which have which can be recorded in monetary terms, like the owner of the business introduced cash into the business. This is transaction. Now due to this economic activity, the financial position of the business will change. Purchase goods from someone, some supplier. This is an economic activity which is going to change the financial position of the business. Sold goods to a particular customer. This is an economic activity which is going to change the financial position of the business. Paid salary, paid wages, paid for carriage. Okay, now these are the examples of transactions. Now from where we come to know that how and what type of transaction have taken place. So answer is voucher. Voucher is a document which authorizes for a particular transaction. Okay, this amount has to be paid, and then on the basis of this vouchers, the amounts are paid to the particular persons, and this voucher becomes a proof that transaction have taken place, and on the basis of vouchers only we come to know transaction have taken place, and that transaction is thereafter recorded in the books of accounts. Now this voucher is a particular printed form. Okay, it's printed differently for different firms according to their specifications and all, according to their details and all, and then it is having a different number, and thereafter it has to be countersigned by the authorized signatory. I again repeat, voucher is a document which authorizes the transaction have taken place. Okay, it provides a proof that transaction have taken place, and on the basis of this transaction will be recorded in the books of accounts. This is what voucher is. Now voucher becomes a proof transaction have taken place, and because of this and base of this entry is passed in the books of accounts. Now a thing arises, which method to be followed, single entry system or double entry system? What are the difference? What is the difference? Simple differences. In single entry system we do not use dr and cr. In double entry book system we use dr and cr. Now question arises, why double entry system which is so complicated, and why not single entry system? See, answer is very simple, that single entry system is basically you can refer it for yourself, but when it is presented to the outsiders, okay, to the interested parties, they may not understand what you have presented. So like a sole proprietor, if he want to opt a loan, okay, now he will be going to the bank, he will be applying for a loan from a bank, and he will be presenting his financial statement, and suppose double entry book system is not followed, single entry system is followed, where he have added for all the receipts and deducted for all the payments. Now bank may not know what is the financial performance. Okay, bank may not know about the liquidity and many more aspects which the bank needs to know before giving the loan. So he may not get that financial assistance from the bank. So it's very important for that particular sole trader to maintain that accounts in double entry book system, so as the users, internal users and external users, may understand. Now coming back to this point, on the basis of voucher transaction, entries are made under double entry book system using some terms as DR in a transaction and some to be marked as CR in a transaction. Now how this DR and CR have to be marked, and other terms like capital, assets, liability, purchase, sales, purchase returns, sales returns, and many more terms which are going to be used in daily terms, daily use. We will be discussing these terms in the next video. Stay connected. If you have not subscribed to the channel, you can subscribe to the channel. You can press the bell icon for further updates. Okay, stay connected. Okay, stay updated. Thank you very much.